Good morning, everyone. We'll wait for a few more minutes to let people join in, and then we will start off in a couple of minutes. All right. Am I audible to everybody? Is it all fine?
Yes.
Okay. Because we have a lot of things to cover, and we only have 1 hour as usual, so we will start now. We have 60 plus people attending already, and I'm sure others are in the process of joining us. So, a very important guide on the free zone, which was awaited for a very long time. The guide has been a sort of a mixed bag. It did clarify some of the very important point, but it also left some other items open still for either interpretation or I would say non-clarity on some aspects. What we have done is that without going into the actual free zone, because most of the you will know the free zone conditions and other thing, we are going to focus more on the guide side of it. What we are going to do is my colleague Karishma will take you through the basics and the administrative aspect of the guide, where it talks about the conditions and compliance and all of that. And I will then discuss and focus on the qualifying activity and what all things have changed from qualifying activity point of view. So about first 15 to 20 minutes is what we will do on the overview of the recent development, the guide, what it is talking about, and what are the changes which it has brought about or clarified some of the points that guide has. And then we will go into the details of the qualifying activity and what has changed or clarified there and what is still to be clarified there. So it will give you a perspective of what has changed, and it will then take us through back into the realm of attending to the main important aspects of it. You can keep putting your questions in the chat. We'll take that at the end also, or we'll try and answer it during the course. Of course, we'll have a Q&A towards the end, so we'll keep some time for that as well. But feel free to keep writing to us, and thank you. So I'll hand over to Karishma. She'll take you through the first two part of the presentation, and then we will discuss more about the qualifying activity and the conditions for each of them in the second bit. Okay, please, Karishma, can you take forward?
Yes. Uh, Good morning, everyone. My name is Karishma, and I'm the tax manager at Frame Advisory. Thank you so much for joining us today. Before quickly jumping into the webinar, I would just like to remind all of you that today is 31st May, the deadline for corporate tax registration for all those companies whose licenses have been issued in the month of January or February. So hope you all have registered. So we'll quickly begin. Now, just to refresh your memory, the first corporate tax law was issued on 9 December 22. Therein, in 23, the Ministerial Decision 139 and the Cabinet Decision 55 was issued, which were later repealed. Meanwhile, on 19 July 23, the public consultation was issued. And finally, on 3rd November 23, Ministerial Decision 265 and Cabinet Decision 100 was issued, replacing the earlier decisions. And now recently on 28th May, last week, the guide has been issued on free zone persons. Now, if anybody wants to understand the corporate tax implications on a free zone person, there are 4 things which have to be referred. First is the corporate tax law, article number 18. Article 18 talks about the conditions to be satisfied for a free zone person to be considered as a qualifying free zone person. Next is the cabinet decision number 100. This talks about qualifying income. Third is the ministerial decision 265. This talks about the list of qualifying activities. And the last is the free zone guide, which provides more clarity on various aspects of a free zone taxation. Now, who is a free zone person? A free zone person is a juridical person who's incorporated or established in a free zone. Now, this also includes a branch of a non-resident person, which is a foreign company, as well as branch of a mainland entity in a free zone. So these two will also be considered as a free zone person. What are the corporate tax rates available for the qualifying free zone person? It's 0% on qualifying income and 9% on taxable income, which is not a qualifying income. Now let's come to conditions specified under Article 18 of the corporate tax law. Now only if these all conditions are satisfied, then a free zone person can be considered as a qualifying free zone person. The first condition is a free zone person has to maintain adequate substance. This means you need to have proper office and people to demonstrate the adequate substance in the free zone. The next condition is it needs to have qualifying income. Qualifying income is defined in the cabinet and the ministerial decision. You should not have elected to be subject to 9% corporate tax. Other condition is you have to comply with the transfer pricing rules. Now there are two more conditions specified in the ministerial decision 265. The non-qualifying income cannot exceed the de minimis requirement. The de minimis requirement meaning 5% of your total revenue or 5 million dirhams, whichever is lower. And the last condition is you need to have audited financial statements irrespective of your turnover. Now, only if these 6 conditions satisfied, only then you'll be considered as a qualifying free zone person eligible for 0% corporate tax rate. In case any of these conditions is not satisfied, you will lose your status as a qualifying free zone person, not only for that particular year, but also for next 4 years. So this is a very important point to note that you lose your status in total for 5 years. Now let's quickly jump into the key insights of the guide. Now, in case if anybody wants to understand whether a free zone person is operating from a free zone or a designated zone, you will have to check with your respective free zone authority. There is no separate list issued for free zone or designated zone, and the only option is to check with your free zone authority. Coming to election, a free zone person by default will be considered as a qualifying free zone person unless it fails to meet any of the prescribed conditions. Now, if a qualifying free zone person elects to be subject to 9%, it will lose its status for that particular year as a qualifying free zone. Also, for the next 4 periods, it will not be able to avail the 0% benefit as a qualifying free zone. So in total, it will lose the benefit for 5 years. Now, the election to be subject to 9% can be made anytime during the tax period or till the time of filing the tax return. Coming to allocation of expenses, if a free zone person has both qualifying income and taxable income, say for example, you have qualifying income from distribution activity, but you also have income from immovable property or domestic fee, which is a taxable income. So in this case, you have to allocate your expenses between the two based on the arm's length principle. Now, in case of transactions with another free zone person, the guide recommends that you need to have an undertaking from the purchaser stating that he is the beneficial recipient. Beneficial recipient here means he is the intended user of the goods or services. So this is a very important documentation to be maintained in case you have transactions with another free zone person. Also, if a free zone person has just started and is in the startup phase and does not have any revenue generation, it won't lose its status as a qualifying free zone person as long as it doesn't have any other non-qualifying income. So this is also a very important clarification which the guide has brought up, that even a person who is in the startup phase and has losses, even in that case, it can continue to be called as a qualifying free zone person. Moving on, in case of losses, if the taxable income of a free zone person has losses, then those losses can be carried forward, but it can be only set off against its future taxable income. Now, in case you have losses from your qualifying income, this cannot be used to set off the taxable income. Say, for example, you have losses from your manufacturing activity on one hand, and you have income from immovable property. Now, these losses from your manufacturing activity, which is a qualifying income, cannot be used to set off the income from your immovable property. In case of mixed use of property, being both residential and commercial use, the revenue has to be allocated based on an arm's length principle based on a proper allocation key. The allocation key could be your property value, the rent or space, or any other allocation key. Now, qualifying activities also include ancillary activities. Ancillary activities are those which are either necessary for the performance of the main activity, or it makes a minor contribution to the main activity and is so closely related to the main activity that it cannot be considered as a separate activity. So let's take an example. Suppose a free zone company is engaged in distribution of electronic devices. Along with the product, it also provides warranty and installation services, and this is necessary for the performance of the devices. So this installation and warranty services will be considered as ancillary to the main activity and will be eligible for the 0% benefit. Now, in case you have income from qualifying intellectual property, say you're developing a patent, in that case, the guide recommends that we'll have to maintain appropriate documentation to track the qualifying expenditure so that we are able to demonstrate a nexus between the expenditure and income. So one has to set up appropriate tracking mechanism in order to avail the benefit of 0%. Moving on to compliances. In case a qualifying free zone person has other taxable income, say it has income from immovable property or domestic fee, or it has branches, in that case, the guide says that you are not required to prepare separate financials. One financials is okay. However, you need to have proper documentation to demonstrate how you've arrived at the calculation of your qualifying income. Moving on to adequate substance. Now, one very important condition in order to be qualified as a qualifying free zone person is that you need to maintain adequate substance throughout the year. So this is a very important condition which has to be satisfied. Now, there are two things which has to be followed in order to meet the adequate substance test. First is your core income generating activity has to be conducted from within the free zone. This is a very important point. In case of distribution activity, the core income generating activity has to be from a designated zone. You need to maintain adequate assets, full-time employees, and appropriate operating expenses. Only if these conditions are satisfied, you'll be able to demonstrate adequate substance test and you'll be able to satisfy the conditions and will be able to benefit as a qualifying free zone person. Now, in case you have more than one qualifying activity, say you have income from manufacturing activity and you also have income from treasury and financing. So in this case, the guide says that adequate substance has to be demonstrated for each activity. So you can't have same employees overseeing both the activities. So for each activity, you need to have proper employees. So double counting is not permitted and you need to have employees for each set of activities. This is a very important clarification which has come up and this has to be kept in mind. Also, your core income generating activities can be outsourced to anybody in a free zone. However, what is important to note here is that adequate supervision is very important. So there has to be a senior person who's overseeing the outsourced activities. Only then you'll be able to avail the benefit of 0%. Now, another important point here is that in case you're engaged in distribution activity, the core income generating activity can be outsourced to anybody in a designated zone. It cannot be outsourced to a free zone which is not a designated zone. So this is very important in case of distribution activity that SIGA has to be from a designated zone. Now let's look at few illustrations. In this case, ABC is engaged in distribution activity and is operating from JAVSA DZ. The tax period is Jan to December. This is the first year. Now let us assume that it has no employees till date and it has just hired employees in June. Whether this ABC will be able to demonstrate the adequate substance test. As I mentioned earlier, that the adequate substance requirement has to be met throughout the year. Since in this case, the employees are hired in the middle of the year, so adequate substance test is not met and this ABC company will not be able to avail the 0% benefit. Also, it will disqualify as a qualifying free zone for next 4 periods. So for 5 years, this company cannot be considered as a qualifying free zone company. Now let's look at another illustration where XYZ is registered in JAVSA and is engaged in distribution activity. The warehousing facility is in JAVSA, which is a DZ. However, its core income operations are being conducted from DMCC, which is not a DZ. Your all employees and your offices are located in DMCC. So whether in this case XYZ will be considered to have made the adequate substance test? The answer is no, because I mentioned earlier that in case of distribution activity, the SIGA has to be from a designated zone. In this case, the SIGA is performed from a DMCC location, which is not a designated zone. So that is why in this case, the adequate substance test will not be met and XYZ will not be able to qualify for free zone benefit. Now let's look at another example. XYZ is again registered in JAVSA, which is a DZ, and is engaged in distribution activity. It has a core team of 10 employees who are managing the overall business, including sales from the designated zone. Okay. However, it has other 90 employees which are working outside the designated zone, but they are only doing routine delivery activities. So whether in this case, XYZ will be considered as a qualifying free zone person. So since the core income operations here, including sales, is taking place from a designated zone, so adequate substance tests will be considered to have met. So this company is, since it's engaged in a distribution activity, the core income generating activities happen from a designated zone, and that is why this will consider to have met the adequate substance test, and this will qualify as a qualifying free zone person eligible for 0%. Now I'll hand it over to Mr. Nirav.
All right. So when we looked at the main aspects of the procedural requirements, okay, now we want to focus on mainly on the qualifying activities and what all are changes which has come about in this part. So if we look at, we start with manufacturing, okay. Very important thing that goods that are manufactured in UAE do not need to pass through the designated zone, which has been now clarified, but post-sale and customer support activity are considered as ancillary part of it. They also define the term goods, and where they have said that if it is software which can be sold independently of a physical asset, then it is not a good. But if there is something which is embedded in a hardware, like a gaming console, and you are selling a gaming console, then that can be termed as a goods. So if there is a software which is embedded in the hardware, which is inherently part of that hardware, then it becomes uh, part of goods, and therefore this important definition of goods is helpful for a lot of the software type of activities, and also to make sure that we don't mix up the two items together. So it is very important, and of course clarifying that manufacturing and this ancillary support activities are part of it also helps manufacturer clarify a lot of their doubts about what will qualify and what will not qualify. However, still the main point that still remains to be answered, and which is not yet answered very clearly, is that if manufactured goods are then sold, then is it mandatory for the distribution activity to be then done through designated zone, or can manufacturer directly sell? Okay, so that is not yet clarified, and we still believe that that remains a gray area. So here in this example, if you see that there's a company S which is manufacturing an MRI machine, and it is selling it to company Y, and it also renders the post-sale service like installation and others. So all of that is regarded as part and parcel of the manufacturing, and is included as part of the manufacturing qualifying activity. So that's not a problem, and you can continue to do so. When we look at the next example, here in this case, the company is developing and selling accounting software. And because it is a software which is independent of the hardware, they have said that this will not be qualifying as a manufacturing. And therefore, this will still remain as part of, if at all, as part of intellectual property, but otherwise there's no other benefit attached to this, and will not be part of the qualifying activity, and you can't take any benefit out of it. Okay. Then at the same time, if there's car with a pre-installed navigation, or like I mentioned before, if there are gaming console with the gaming software sold, then all that is considered as part of the goods. And therefore, those do not need to be segregated, or those will not be called as software in on its own, and will still be considered as goods and will be part of the qualifying activity that one is doing. Okay, so that's fine and acceptable, and it was very helpful that this was distinguished. Like I mentioned, that if you are supplying the goods to customer within the free zone, there's no problem, because then you don't need to worry about the designated zone qualifying activity and all that kind of stuff. If you are not supplying the goods to the free zone customer and you're supplying to outside the free zone, then is it mandatory for the manufacturer to supply it through a distribution arm in a designated zone or not is not clarified. In our view, that this area still remains open. And in the earlier version of the consultation paper, it was highlighted very clearly that this distribution activity needs to be done only through designated zone. So that seems to be the logic continuing at current point in time as well. And therefore, that may not go into the qualifying income category, and one needs to be careful with this aspect particularly. Now, if we turn ourselves into the next one, which is the distribution, which is the main core of a lot of debate and discussion. So here the good part is that they are first of all defining who is a distributor and who is a just a logistics service provider. Okay, so he holds title to the goods and therefore he is considered as a distributor and therefore he is a trader. Okay, it includes buying, selling of goods, material, component parts, and any other items that are tangible or movable. So the item that you can deal with within the distribution activity is pretty wide. And here also you can deal with it into product which is embedded onto hardware. So software which is embedded onto hardware is also part of the distribution activity. What is very important here is that now we have got a condition on the end user which is now being clarified. So while there is one good part that happened with this entire distribution thing, which will show on the goods movement part, but there's one very limiting factor that has come in, which is the end user requirement. So now end user was earlier, which this item was never defined in anywhere in the law or the ministerial decision. They want end user to be the person who eventually uses the product for its intended purpose, whether they may be personal, commercial, or industrial. Now, because of the addition of this word industrial, this causes a lot of issues. If you are supplying to an industry which uses your product as a raw material, it's a consumption for them, and therefore they are end users. Then will you not get the benefit of this provision? Potentially, yes. So one needs to be very careful and take a declaration that the person to whom you are selling is not actually an end user, it is a reseller. And reseller is the one who trades or sells the product either as is or as part of its overall product that it is selling. Now, if it changes the complete form and goes into a different product, can you still be calling it a same product or not is a big question mark. And whether undertaking obtain will suffice for this purpose or not is also yet to be seen. What was very good was that they have now clarified very clearly that the distribution benefit, once the distribution activity is conducted from the designated zone, whether the goods move through UAE or not, whether the goods move through designated zone or not, the entity will still get the benefit of the 0% rate and will still be treated as qualifying activity. So high sea sales, local purchase and export, import and local delivery, all of that, even whether it passes through designated zone or not, passes through the same office where the company is carrying on business or not, does not matter as long as that activity is being carried on from the designated zone. So there is no limitation on the mode of distribution, and therefore this is a very important clarification, and this distinguishes the entire taxation subject from and it kind of delineates it from the movement of the goods to the condition that the taxpayer needs to satisfy and how it needs to operate. So this is very important and is very beneficial overall for the trade, as there were a lot of doubts around this part. um, the examples which are given by the guide itself is also reproduced here just for your understanding. So this example clearly mentions that goods do not enter the UAE and it is shipped directly to the country of consumption. And the designated zone company is the one which is coordinating everything through the designated zone, and it buys the goods and sells it on its own behalf. And therefore, this will be part of the qualifying activity. Similarly, they have given couple of other example where they are saying that if I'm buying from a manufacturer, I actually bring the goods into designated zone and then sell it to the retailer or distributor for reselling. Again, I'll be meeting the requirements, right? And only point is that in case of import, they continue to mention that import, then the goods needs to be imported and routed through the designated zone. Now, practically from a UAE perspective, any import would either happen at the port or at the airport. Most of them are designated zones. And therefore, custom clearance, when it happens at that port or airport, is passing through the designated zone. Now, does it need to pass through the designated zone where the company is incorporated? That's not required. So this is something that one needs to understand clearly. Okay, next one is also that if you are buying from a local manufacturer and you are exporting it, as long as you as a company is in a designated zone, you can take that benefit. Okay, an end user concept uh, will need to be kept in mind. So if you're as long as your customer is not an end user, you can take this benefit, and therefore again the movement of goods directly does not hamper the ability to avail the benefit. Okay. Next is even if it is a distribution of goods within UAE, and this is where there may be slight issue, and one needs to be very careful with the documentation here. That if you're buying also from UAE and selling also into UAE through a designated zone company, technically they have mentioned it's allowed, but I would still recommend that one needs to do the bill of entry and documentation in a manner that the role of the designated zone company is very clearly defined. And if possible, the ideal scenario would be to bring the goods into the designated zone and then sell it back to the local company. But this still opens some amount of Pandora's box, that then should I do the retail or the domestic sales also sitting in designated zone? Technically, it says yes, but I might have a different view on that aspect. Yeah. Okay, so then we turn our attention to, like I said, that the end user aspect is the most critical aspect here. So while all the other clarification are beneficial, that movement doesn't need to be through designated zone. It can be high seas, it can be anything, and that's fine as long as the company which is availing the benefit is meeting all the other requirements. But this condition of end user is sort of I would say Pandora's box, or an issue which has been raised, that how would I know whether my customer is an end user or reseller? And therefore there's a need to take an undertaking from them. But if you know for sure that you are supplying to, in this example, a real estate developer, a steel, which is going to use for making a construction of a building, is he an end user? Technically, he may be. He could be considered as an end user, but at the end of the day, he is not using it for his own self. He is creating another product and sending it. But because the end user definition is the word industrial into it, any sort of this kind of usage will also tantamount that he is end user, and therefore you should not get the benefit because you are supplying to such an end user and not to reseller. So distribution benefit, while it is vast, because of this reselling condition and the definition of end user will have limited. One needs to be very careful how you avail that benefit, and are you very sure of the end user condition to be met or not, and are you very sure that you are only selling it to reseller. So these are opening new issues from compliance point of view. If we go to the next one, which is on qualifying commodity. Now, this was introduced mainly to give benefit to a lot of free zones which are not designated zone, and companies which are operating from such free zone to take benefit of the 0% rate. However, the application of this benefit is limited. One, it only deals with like commodities that are traded on recognized commodity exchange. It has to be metal, mineral, energy, or agri commodities that are traded in a raw form. Now, all this while raw form definition was not there. So now in the guide, they have defined or they have given examples of what they consider to be a raw form. And therefore they have said that it has to be raw form as it is available, or some small processes to make it homogeneous or tradable, right? So if that is done, they is still considered to be raw form, but it needs to be somewhere in the raw form. If it is a processed outcome of something, then that will not be considered as eligible. So they have narrowed down the benefit to very, very limited few entities or few commodities. So in the example they already given under agriculture, it could be wheat, corn, soya bean, all that is part of raw form. Under energy, they are saying crude oil and natural gas. So any derivation of crude oil, which could be kerosene, diesel, petrol, all of that, may not fall within that. And similarly, there are hundreds of others. Okay, so it is not in the raw form and it may not then get benefit of that. They have clearly mentioned that gold or silver bar or aluminum ingots are eligible, and gold needs that some amount of processing to make it homogeneous and tradable, and therefore the gold is still considered as, or bullion is still considered as a raw form. And similarly, one will have to apply this kind of test and look at his HSN code to identify whether it is actually the raw form of the commodity or not. So one, it needs to be traded on a recognized exchange. It needs to be a commodity. It needs to be in its raw form. Only if you meet these three conditions. Here, please remember, you don't have end user condition, reseller condition, nothing of that sort. Here, physical movement also is not important. Only if you meet these three conditions, you can take the benefit of the qualifying commodities. So this is beneficial, but it's limited. So one needs to be careful when you are applying this. So like we said that crude oil is covered, but can we cover kerosene? And in my view, I would say no. And similarly, diesel or any variant of that or anything of that sort, I would not consider it as a commodity which is traded in the raw form. Okay. So one needs to be careful here that while the benefit is granted to expand to entities which are outside the designated zone who are trading in such commodities, but it is very limited to commodities which are traded in raw form, and raw form has now been given a meaning or understanding, which is done, which is what FTA pursues it to be a raw form, and therefore we would believe that crude oil or natural gas will qualify, but others may not qualify from an energy point of view. Okay, next, we will look at holding of shares and securities. Now, this is very important because a lot of investment companies are here, and whether they'll get benefit or not, because a lot of people are actively based here and doing trading. Now, one thing which is very clear already in the law is that active trading is something that they are not encouraging, and that will not constitute a qualifying commodity. At the same time, they have included cryptocurrency as a specified or qualified financial instrument. So shares and securities and financial instrument is covering crypto also. So trading in crypto also is covered. However, the condition remains same. It has to be for investment purpose. And therefore this needs to be held for a 12-month period. Okay, now if you receive some interim income from that, but you continue to have that intention, that dividend or interest will also continue to be eligible as long as you have an intention to hold that for 12 months. That has been clarified as well. But the 12-month holding period is non-negotiable. And if you don't fulfill it, then entire gain at the end of it will be taxable. And then you'll also have to look at the overall de minimis condition if you're violating because of that taxable income part of the qualifying activity. So one needs to be careful and must be very, very clear of what is going to get into this. And only when you have a long-term investment holding pattern, you can bring and qualify under this. If it is not, you will not be able to qualify under this activity and you will not be able to get the benefit under this. And they have also distinguished between a securitization instrument. If it is backed by a non-financial asset, then it will also be excluded from this activity. Only if it is backed by a financial asset, then only that securitization instrument will be part of the qualifying activity, and shares and securities will need to be considered. Okay. So um, if we have company Y, which is a free zone person, which is registered in ADGM and has diverse portfolio of shares and securities, in this example, we have dividend of 1 million, we have a capital gain of 2.5 million, and we have interest of 250,000. Now, because dividend and interest are earned while we have not yet finished 12-month period, but there is an intention to hold, and capital gain was earned only after the investment was held for more than 12 months, then all these three will become qualifying income under this criteria. So one needs to look at each source and its income from where it is earned and the underlying investment, whether it is meeting this requirement or not, and then only apply this. And again, you have to continuously be mindful of the fact that you don't violate the de minimis requirement at any point in time. If you do, then you lose the benefit not only for that year but also for next 4 years. So one needs to be careful of what activity and what asset are being put in the company and whether you're going to trade. And if you're going to trade before 12 months, is it really worth doing that for that benefit that you are losing overall? So one needs to be very, very careful uh, in this aspect. End user is going to create a lot of issues, and we will cover some of the questions in the Q&A. Now I'm coming to ownership, management and operation of ships activity. They have clearly mentioned that ships which are used for local transportation or leisure or recreational purposes are not included. Or if they are run as a floating hotel or restaurant, again, they are not part of the qualifying activity. And if you have business which is solely of maintenance and fit out of the ships, then that is also not considered as qualifying activity. It does not include leasing of containers per se, unless it is ancillary to the overall shipping business. Okay, so all of this one needs to be careful of. Next slide, Karishma. Yeah. So if a company is engaged in shipping business and earns all the incidental income, and they've given this example also, demerit charges, standby charges, high risk premium, or insurance premium, or other similar thing, all of this is part and parcel of your shipping activity, and it all becomes part of your qualifying income as well. So even incidental one is part of it and therefore not a problem in defining that. What is not specifically mentioned is that they still, Karishma, go back to the earlier slide. They have not said, they have not segregated the ownership, management, and operation of ships. If somebody does not own, but it manages and operates ships, does it still qualify? Is not clearly mentioned. Even guide does not touch upon that specific point. Here also they talk about ownership, management, and operation together. And therefore, in shipping industry, it is very, very common for ship owner to be different, who gives the ship on charter, either time or voyage charter, and somebody else then operates and manages it. Okay, so that part is not very specifically mentioned, that whether you can have dealing the ownership and operation and management and still avail the benefit. This will still cause for a clarification, and one would need to be clearly mindful of this risk that is still exist. If we go to the next one, which is fund management services and wealth management services, here they are very clearly mentioned which are the governing authorities. So only if you have a license from any of this authority and you are operating under that license, then you are eligible to claim the benefit of fund management and investment management or wealth management activity. If you are not under that regulatory oversight, you will not get this benefit, and they are very clearly mentioned. The single family office or multi-family offices are not under any of this regulatory oversight, then they will not get the benefit of fund management and wealth management activity per se. They might still qualify for investment in shares and securities and get that benefit if they fulfill those conditions. That's separate. But specifically, they are not considered as regulated, is what they have highlighted very clearly. So one needs to be careful and mindful of this clear distinction which has been laid down. So again, the fund management activity needs to be carried on from the uh, applicable free zone. So if you just have a fund management activity but you don't carry on that, and your parent entity and others still does all that on your behalf and only books that on in the books of this, you will not get a qualifying activity benefit. You have to have right number of people doing that activity locally and not somebody else doing it remotely and just having license here. This is also very, very clearly demonstrated in this example in the guide which is provided. Next. Okay, so very important benefit on the headquarter services, and now they have gone ahead to explain what all kind of services headquarter can give to its subsidiary or related companies. And therefore, all of this you can charge individually for that service, or you can charge overall as a bundle service also. And both of that will benefit from this and considered as qualifying activity, and income will go under qualifying income. That's what is clarified. So to support the regional headquarter activity which is done from UAE, they have clearly mentioned that this is acceptable, and any of this activity that you do from UAE will qualify under the headquarter services. And whether you charge on a bundle basis for all services together, you charge the percentage of the revenue, or whichever manner you want to charge in, that's fine. That's still acceptable. So in this example, we have just highlighted that we have franchises across the globe, and company T, which is headquartered, is charging fee, a bundle fee for providing all of these services, which is strategic planning, marketing strategy, management, quality standard, all of that. It's charging a bundle fee for everything. Now that also can be considered as qualifying activity and will benefit from the 0% tax rate. Okay. So one very important and beneficial clarification on the treasury and financing services, that if you have surplus funds and if you put it within the bank deposit and if you earn interest from that, that also is eligible as treasury and financing services. But only they have given example of this bank interest. If you go and invest, and whether you get under the investment definition and you get that under investment of shares and securities and you get that benefit, is separate. Here they have mentioned only about interest from bank deposit. Is very specific. So surplus interest earned by keeping the money with the bank will definitely qualify under the treasury and financing services, is very, very clearly mentioned. Plus they've given example of all the other normal treasury services, which is cash pooling, cash management, risk management, hedging of the positions, and investment management and financing. So all of that part of the treasury activity, if you are doing that, also will get covered, and the fees in whatever manner you earn from that as a service fee, or as a margin, or as a spread between the two, whichever way is all acceptable as a qualifying income. So that has been clarified very clearly from treasury and financing perspective. So earlier this part was not clear, that if I have surplus fund and I am earning bank interest, will that bank interest go into this or not? But now they have clarified this, which is a welcome clarification for a lot of companies. Next. Financing and leasing of aircraft, they have said the sub-leasing also will be covered. Of course, broking will not be covered. Pure broking, leasing and sub-leasing will be covered. And similarly, logistics services, they have clarified that if you are in the free zone carrying on logistics service, even if you do last mile delivery outside the free zone in the mainland, that will also be covered as long as your entire activity is in the free zone. So that is a very welcome clarification as well, because earlier consultation paper had left that to doubt, that if you do last mile delivery, you can still be caught for that last mile delivery services. Okay. Um, and this is just an example which was given in the guide to illustrate that. And therefore, we still have few open areas. Karishma, go next. Uh, we are saying that the end user condition is going to create a lot of issues. The raw form definition or the meaning that they've assigned to or the understanding that they've ascribed to which they wanted to be implemented will make it very very limited in terms of commodity player of who can benefit from this benefit actually, and whether for manufacturer that distribution activity still needs to be done from a designated zone or not will is also going to remain a crux area, which will create a lot of hardship for the manufacturer in the free zone. Okay, so with this, I want to just keep it open for 15 minutes for Q&A. Um, you can raise hand or you can put it in the chat and we can address the Q&A, or just raise hand and we'll allocate you to kind of ask question and then we can address that also. There are lots of questions in the chat. My colleagues are trying to answer that to the extent possible. Otherwise, feel free to drop an email to us and we'll try and clarify that to you. But if you want to ask question, please raise hand and we will then allow you to take it one by one and go for with that. So yes, Mr. Anwar, you can. Hmm? Why? Yes, can you try and unmute yourself and go ahead?
Yeah, now
Yes, Mr. Anwar.
sir, my question is that if the company is bringing goods through their logistic partners in DAFZA, and from DAFZA they are sending goods to exporting the goods, then that will be a qualifying activity under distribution?
No, because the company per se, which is carrying on that activity, is in IFZA, which is not in designated zone, so that will not be qualified.
Okay, okay. Thank you very much.
Okay, thank you. 1 second, we'll have to actually allow the mic and then you can ask the question. So, yes, Mr. Sivang Agarwal, you can please go ahead.
Uh, Good afternoon, sir.
Good afternoon, Shiva.
Sir, the one you have said for the treasury and financing activities. My question is that, like, if suppose it is a manufacturing company, and we have a surplus funds, and for that we are investing our own funds. So for that means, like, for the manufacturing, we are already complying for the CIGA for that. And apart from that, if we have a surplus for investing and earning on the bank interest on that, so do we have to satisfy for the
So
CIG
as
for
long as it
separate, or?
is, yes, as long as it is only bank interest, you can still get this benefit. But if there are other type of investment that you go into, then you have to see whether you need to satisfy the condition of investment of shares in other securities.
No, no,
And
sir, I am asking, like, if we have the means we are doing the treasury and financing function, and in between that we have to in between that we surplus investment, or in a manufacturing also we can have that means actually in the
Shivang,
guide that
Shivang,
example was given
Shivang,
under yes, yes.
yeah, hold on. I'm saying that whichever activity that you're doing, okay, with
Okay,
qualifying activity, along with that, if you earn bank interest, that will go under treasury and finance activity as a separate qualifying activity. Okay.
okay, and we don't have to separately means qualify for the CIG, means we don't have to look
SIGA you
into
will have to
that.
maintain even anywhere. So as a qualifying free zone person, you have to maintain SIGA. And if you're investment personnel, if you're trying to avail that benefit, then that personnel also has to be in the free zone. That's all.
Okay, thank you, sir. Thank you, sir. Thank you.
Okay. Mr. Ajay Kumar, I'm allowing your mic. Please ask your question. Ajay, you can unmute yourself and ask your question.
Hello, sir. Good morning, sir, and thank you so much for explaining the corporate guide in such details.
Yes.
Sir, my
Thank you.
question is regarding this beneficial recipient and end user. In a single trade from, say, company A to company B should be the beneficial recipient and as well as the end user of the same at the same time?
First of all, you need to define which activity under which you are taking the benefits.
It is under qualifying activity distribution.
If it is under distribution, you have to meet end user requirement.
And sir, end user need not to be
And
end user, no, sir, in
anyway,
case.
because you are dealing as a qualified free zone person, you need to be beneficial recipient as an overall condition, right?
Correct, correct.
You have to meet both the conditions.
But should not be the end user, because in case of
Should
end
not be
user, the
the end
benefit is
user.
not available.
It has to be reseller. Otherwise, the benefit
Yeah.
is lost.
But I was thinking like a beneficial recipient is always considered to be the end user. When we
No,
ask
not
about the
like that.
financial
No,
transactions,
no, beneficial recipient is one who buys the goods on his own risk and
okay,
is not doing it for somebody else as a facilitator.
the
As long as
specific
that
goods should not.
condition is met,
Correct.
you are reseller in your own right, you are a trader in
Mhm.
your own right, there's no problem.
But sir, what happens in case of high C sales? No? There is the shipment document having the instruction that this material will go to the third party.
Yeah, Ajay, we'll have to look at those documents carefully.
Okay, got it.
But the point is that if the intervening party is a genuine trader and has the risk associated with the ownership, then that is a beneficial recipient.
Got it, sir.
Yeah.
Thank you. Thank you.
Thank you very much. So, Utsav Ghia, I am enabling your mic. You please ask your question.
Hope you are doing well.
I'm fine, Utsav. Thank you.
Yeah, just my question is, if I'm registered in non-designated free zone, for an example, Hamria free zone,
Hmm.
and I'm doing the trading activity, distribution activity.
But
using-
Hamria is designated, dear.
Yeah, just 1 second. My question is, if I'm doing a distribution activity from Hamria free zone and using
Yes.
the local custom code, not a free zone code,
Okay.
then what will be the implication, whether that will be considered as my local sale or a designated free zone distribution act?
So, Utsav, two or three things. What guide is clarifying is that for giving the benefit under corporate tax, we are not going to track your movement of the goods through or from the free zone. We're going to see whether you are actively carrying on that activity in that free zone or not.
Okay.
Okay.
that
Yes. Yes. If you have supporting evidence of the movement through the designated zone, it will help. But that's not a condition which is must.
Okay. So even if I'm using the local custom code, and even if I'm doing the distribution from a designated free zone, that will
Ideally,
qualify.
we don't recommend that, is what I'm trying to tell you. Right?
Yeah. Okay. Thank you so much.
Shailesh bhai, thank you for joining. I'm allowing your mic. Please ask the question.
Thanks, Nirav, for this session. It's my pleasure to join your session. Okay,
Thank you for sparing time for us.
I have two questions. SIGA needs to be performed by a free zone company in the free zone.
That's correct.
Right. So, how will a visit by the sales team of a free zone company to customers on mainland and overseas customers be viewed at?
That's fine, sir. As long as sales team is based in on the visa of the free zone, their main office, a day-to-day functioning is from the free zone. They can visit the customer and come back. That's not a problem.
So those sales will not be considered otherwise. I mean,
No. Because again, we have two advantage now. That one, they have said very clearly that the movement of the goods is not material thing for a corporate tax. It's
Okay.
where you conduct your activity is material.
Okay, fine. That's
Right?
clear. Fine. One more question, if you allow
Yeah.
me. Now, in the normal course, when we deal in different currencies, we have income from currency fluctuations. Will that be a part of that? Will that be considered as an ancillary activity to the main qualifying activity?
If it is part and parcel of your hedging activity for that commodity that you deal in, it may be. If it is just pure separate activity, it will not.
Okay, fine. Thank you. Thanks for the
Yeah.
clarification.
Thank you, Shailesh bhai.
Thank you.
Mr. Sanjay, I'm enabling your mic. Please ask your question. Unmute yourself and ask your question.
Hi, Mr. Nirav.
Yes, Sanjay.
So my question was that when we have a designated free zone company, and when we are importing from outside, do we need to do the customs clearance by us ourselves, or can we do it from the customer side itself?
So it depends on what the end objective is, no? If you're going to store it in the free zone, yes, you will have to do it as transit or whichever way. And if you're going to sell it to your end customer, which is already identified, then let your customer clear it. No?
And both cases, it can be considered as qualifying income.
That's right.
Okay, thank you.
Okay. Thank you,
Okay.
Sanjay. Mr. Sumit Manglam, please ask your question. Unmute yourself and ask. Yeah.
Hi, sir.
Hello.
Thank you very much for the useful insight.
Thank you.
Sir, I just want to talk about the illustration of the high sea sale, where it has been mentioned that if the designated zone buys the goods from a manufacturer, so that buying a goods from a manufacturer, is it necessary? Like in our case, we are buying some of the goods from a DMCC entity, which is our related party. So will that not be a qualifying activity if we are buying from the DMCC entity?
So first of all, if your entity is in designated zone,
Yeah.
and you buy from anywhere and sell anywhere, as long as your activity is carried on from the designated zone, you will meet the condition. Mr. Arun, I am enabling the mic for you. Please ask your question. Unmute yourself and ask.
Thank you, sir. Thank you for the wonderful section. I have two questions. First one,
Yes.
my company is in a designated zone and I'm importing goods, but goods are directly cleared by customer. That customer is located in UAE, mainland. So
Yeah.
is it treated as a qualifying activities?
Yes. As long as you are in a designated zone and you are carrying on your business from there and you meet all your substance conditions.
Okay. Second question, I'm dealing both persons. One is an end user, other one is a manufacturer. So this end user can be treated as a non-qualifying activities. It will calculate the de minimis calculations.
Yes. There is one from financial department. I don't know who's that. I have enabled the mic for you. You can unmute and ask your question.
Hello, I'm sorry. My name is Muhammad.
Yes, sir.
My question is, a DMCC company providing agency service to a foreign shipping line at foreign ports through local agents there in foreign countries, okay?
Yeah.
And all of it is directed and managed by a full-time manager sitting in DMCC office. Would this be considered as an outsourcing outside free zone or SIGA in the free zone? Is there, how is
No,
the
no. So,
probability?
but if you are you doing operation and management of the ships?
No, we are just agents, port agents.
So then agents will not qualify for this. For agency fee alone, you will not qualify.
Alone, okay. So
Yeah,
we
because
have
it's
to
a
do
service
both.
which is being provided, and service does not get this benefit.
Okay, thank you.
Thank you. Anish ji, thank you for joining us. I'm allowing your mic. Please unmute yourself and ask your question.
Afternoon. Sir, I want to ask one question. We are JAVSA registered company, and
Yes.
we are into IT distribution, hardwares.
Into IT distribution.
IT distribution.
Hardware.
Yes, and we sell softwares also. So software sales to mainland customers. Will it qualify for this de minimis rule or
Is
no?
software embedded in the hardware, or is software
No,
sold
these are
separately?
separate.
So software is not goods. It will not come in this, and therefore it will not be qualifying activity.
Okay, thank you.
Yeah. Okay, Mr. N. Kapoor, I'll allow the mic for you now so that you can ask question. Mr. Kapoor, you can unmute yourself.
Can you hear me?
Yeah, I can hear you.
Good afternoon, sir. A quick question. I deal in scrap and I buy, it's like a third port country shipments.
Right.
Sometimes I sell it to a manufacturer who's a steel producer, and sometime to a trader.
Yeah, so you have to be careful now that if you're selling it to the manufacturer, then you will not be in the qualifying activity, but the trader will qualify for the distribution.
Because mostly the products are sold to the steel mills as scrap, and they then,
That is the problem, and that's what I highlighted in the example, that that might be regarded as an end user, and therefore you may not get the benefit because you need to sell it only to reseller.
yeah, he's a manufacturer, he processes it and then, further uses it.
Yeah.
Okay, thank you.
Thank you. Umang, I'm allowing the mic for you. You can ask your question.
Thank you for the amazing session.
Thank you,
My
Umang.
question is, I have a company registered in a DMCC free zone as well as registered in the DAFZA free zone. And in both the free zones, we are having the advocate office space, but the employees are registered in the DMCC free zone, and we are recharging that employee cost to the another free zone at an arm's length price. Then
Right.
whether both will get benefit for qualifying free zone activity.
But depending on which activity you're talking about, no?
Yeah, so in DMCC free zone we are doing free zone to free zone, and in DAFZA we are doing import export.
So if distribution activity you're doing in DAFZA, the outsourcing can only be in designated zone, and DMCC is not designated zone.
Yes, but the question is, like in DAFZA we don't have an employee. We are using the employee of DMCC.
Then you will not get the benefit.
But if we are recharging our cost,
Doesn't
at
matter
arm's
because your
length,
recharging is coming from DMCC, which is not a designated zone. Mr. Arun, I am allowing the mic for you. Please unmute yourself and ask the question.
No, sir, my doubt is cleared. I asked previously.
Okay, very good. So I'll go to Mr. Chetan. I'm allowing your mic. Please ask. Chetan bhai.
Yeah, good afternoon.
Good afternoon. Bolo, bolo.
That again, my question is regarding to that end user because we are selling it to direct. We are selling clinker to cement companies in UAE and certain. We are exporting to India and other countries.
Yeah, but Chetan bhai, if you're the end user condition is only there in distribution.
Okay.
When you're in manufacturer, you can sell to end user. That's not a problem.
Okay.
Yeah, so it depends on the activity, not everything.
Okay.
Okay, Mr. Mitu Mary, Mr. or Miss, I am not sure. Mitu Mary, can you please unmute yourself and ask your question?
Hi, sir. I'm Miss Nidhu Mary.
Yeah, yes, ma'am.
Good afternoon.
Good afternoon.
So, we are dealing with the purchase, import, and export of trading like FMCG goods.
Right.
Okay. So, we are importing the goods from the other persons, but I want to know at what time we have to post the purchase bill, like when it is loading from the airport or when it is arriving at our port. We are very confused about the point of posting the purchase bill.
From when the risk becomes yours, it's more an accounting question, but that's fine. When does the risk becomes yours? Is the transportation arranged by you? Then you do it at the time of start of the transportation. If transportation is arranged by your seller or supplier, then once it reaches here, the risk is transferred to you, right? So you pass the entry when the risk is transferred to you.
Okay, so whether if it is on CNF basis or CFR basis, so
But
when
who
is the risk is transferred?
But that depends on your documentation, ma'am.
Okay.
You have to look at your documentation and decide when the risk actually transfers to you, and then you pass the entry.
Okay, okay. Risk in sense the risk of goods, all
That's
goods.
right. Yeah.
Okay, okay, okay. Thank you, sir.
Thank you. Chirag Modi, I'm allowing the mic for you. Please unmute yourself and ask your question, please.
Good afternoon, Nirav. Thank you for the session. My question is related to the steel. We are a Jebel Ali based steel trader. We supply the coils to the manufacturer, or the further process the customer. It changed the form, but they are not the end user. They are again reselling to this another party to their customers.
Yeah, but the
we are
HSN
confused.
code will change, right?
Yeah, they are selling in the mainland, or coils become a
I'm not
sandwich
saying.
panel, or
Yeah, so that's why if you change the product code, then it will not remain reseller. It will become a end user. So we'll need to be very careful with those aspects.
yeah. Okay, got it. Yeah, thank you.
Thank you, Chirag. Right, Mr. Nag, I'm allowing the mic for you. Please ask your question.
It was a great session, really.
Thank you.
And my question is, there is a shipping company located in DMCC, which is not a designated zone. The shipping company takes the vessel from the market on charter and give it on sub-charter on voyage basis or time charter basis and operates worldwide. The complete manpower, office, everyone is sitting inside DMCC.
Right.
They don't own any ships.
Right.
So in that case, whether they are coming under that qualifying.
So that's what I
person?
mentioned, that one, for shipping, you don't need to be in designated zone. You can be in DMCC and still take that benefit. But what is not clarified is whether you need to be an owner and operator and manager of the ship, or can owner be different and operation and managers of the ship can also avail that benefit. That's not very clearly mentioned. So this is something that we need to examine in detail and then come to conclusion on. But this is one part which is not fully clarified. But otherwise, you can be in DMCC and take this benefit. There's no problem.
Thank you, sir. Thank you.
Thank you, Mr. Nag. All right. So we have responded to all the hands that were raised. If you all have registered and we have your emails, we'll try and send you the slides. And otherwise, most of the chat has been responded to by my colleagues. So I would like to thank you everyone for joining us. And it was indeed a pleasure to do this session with all of you. And we look forward to seeing you in different forums or in our offices soon. Thank you. Thank you all.